to this um, next class tutorial. So we're going to be talking about order block. As you have seen, you have learned about market structures, that be how market has been moving, the direction of market. And you can see how we are applying each of those values to each other. Now you've talked about the PD arrays, the premium and discount. Now we're talking about order block, okay? And subsequent classes also have other conferences coming up, okay? This is institutional, one of the key institutional reference points that you cannot do without, okay? As important as this tutorial is still not going to be I don't think the concept is very simple, so I won't make it so elaborate. But before we continue, let's look at what order block is. Of course, you might have had order block, but let's just check on Google and let's see what order block. What order block, right? Order block. So he said in trading, another block refers to a specific area on a price chart where significant buying or selling activity has occurred. All right. So in other words, it's a two words. Okay, it's a two words conference. Okay, it's a two-word conference, and it's from order that has to do with arrangement. The block has to do with huge level of transactions. Okay, see, the bottom line is this. You can't really see it when it's happening, okay? You cannot see when that order block occurred. You can only identify order block on your chart. What I mean is, the big boys in the market, the institutional traders, they do this at your back. You only see the reaction like, oh, they've put something here. Something was not there initially before. But after a few hours or minutes, you saw that, oh, this already occurred here. That's another block occurred. So you can only identify it from your chart. All right. So that's and that you must take a note of. So what you want to train your eyes to do is identifying that activities of the institutional traders. Okay. So we have what's called the bearish order block and we have the bullish order block. There are two types of order block we you have. Okay. So and bearish order block, like know what bearish direction is now? Bearish market that is coming down, right? So we have market that is if I have this market that is going up like this, right? Sorry, I have this market that is going up like this, right? Now I have this breaker here, okay? Now this market as it's going up like this, okay? The last green candle that was printed here, that was printed at the top, okay? Before this market breaks down, is called an order block. That is what I mean is this. You know that there will be consistent buy candle here, right? Green candle keep printing before you now see one red candle will just do like this. Now like what is happening, gangan? So this green candle here is what called an order block. That last green candle was printed before you have this massive move of candle to the downside, massive move of red. It may not be one candle, okay, so it may be consistent red candles. That last green candle is your order block for a bearish movement. So that's what you call a bearish order block. That is the last green candle that led to a bearish movement. It's called a bearish order block. It's just like say it's selling family out. So you get everybody they keep saying, okay, me they keep going, no let sellers enter. No let sellers enter. But along the way, the guy just say, I won't go sleep, Joe. He just lose guard. And sellers comes trap in. They come okay, I say seller trapping. If you call you bullish candle again, I will call you bearish order block. That is, you arrange orders forms of monies, and you allow liquidity to push in into the market. So that is that. Okay, that is the concept. And similarly also to a a bearish movement, a bullish, bearish, a bullish order block too. A bullish order block also do what the bearish order block did. So we have markets doing lows, higher low and lower lows and lower highs, lower lows and lower highs, lower lows and lower highs, and suddenly you just see that this market just do pa, right? Just see that this market just do pa. Okay. The last, the last, the last sorry. All right. So the last red candle here, okay, the last red candle that was printed there, before you have push up of markets of green candles to the upside, okay, and you have push up of green candles to the upside. Those candles is what we called the bullish order block. Okay, that's what we call the bullish order block, right? That's what we call the bullish order block. So let's see it on our chart so we don't waste much of our time, because I said I won't bore you with so much of theory. This these are classes are practical classes. Okay, this zero USD, you can see now. I've told you that my strategy here, we are dealing with everything possible. Okay, crypto, stocks, all of it. Name them. Synthetics, name them. All right, so let's look at this is a monthly time frame of Euro USD. Now let's see what happened here now. Okay, so market, you can see this market. This is another block. You see this green candle here, pull like this is another block. Okay, that's another block. That's what a bearish order block. Okay, or this a bearish order block. This rather bearish order block. You see it led to break structure here, and you see market returning bound there rather than pull down. Okay, all right. In the nearest future, we want to see reaction at this place too. Okay, so but let's look at more vivid examples so you will see what we're talking about. So it will be a bit clearer. All right, so look at this market now. See, market has been going up from here, going up, going up. And we'll get here, right? We'll get here. You get here, you see reaction that broke down here. This is an order block. This is an order block. Okay, this is an order block. This is an order block. Their market has tested it. You wonder how market tested it. When we look at some basic things, why we say market has tested it, and may not not fully tested. In the next future, can see market can come back there later on in the next future and see rally down. But market has partially tested it. I will explain why. Okay, in other block, there are basic things you want to look out for. Okay, okay, before I talk about what makes other block valid, okay, you've seen the two type of market. Okay, sorry, I've not shown you the bullish order block, right? Bullish order block. Okay, this bullish order block. Look at this candle here. Look at this red candle that was printed here. This red candle here. As you can see, what happened? Market came down here. Boom. And you can see the reaction. You can see how market came into the zone and went back. That is a bullish order block. Okay, that's a bullish order block. All right, so you always see continuously like that. There are plenty on your chart, so you have to just train your eyes to look at them and train yourself to see them, very well. Okay, before I talk about excuse me, before I talk about what makes order block valid, let's talk out about checklist. Okay, checklist on how to trade. Checklist how to trade with this other block strategies. How to use it to trade effectively. how to pick trade setup. Okay, now the first thing is you want to understand the structure of your market. When I mean the structure of your market, we've done market structure. So this was a market I picked some time ago. I don't know. Okay, so you want to look at for market structure, right? Market structure. So when you see the market directions, that is market structure. We've done market structure. If you are yet to understand market structure, or if you are yet to watch the video on market structure, go back there and watch and learn market structure. It's very, very essential. Okay. All right. So market structure. Okay. So I want to see the direction of the market. So the first thing you want to do is check your market structure on higher time frame. That will give you the overall trend. Okay. Now the concept is this for order block. Let me give you one key thing. If you are taking your order block on 4 hours time frame, okay, you want to pick your trade entry on 1 hour time frame. It's what is called two in one. Let me call it two time frame lapses. Okay, like sorry, 4 hours time frame. If I identify my order block on 4 hours time frame, for instance, okay, if I identify my order block at 4 hours time frame, what I want to do is I want to get it on I want to get my entry on 1 hour time frame. Okay. Yeah, if I have my order block on daily time frame, I want to get my entry on 4 hours time frame. Okay. If I have it on monthly time frame, I want to get my entry on daily time frame. Okay. So you have these two gaps in between them. Okay. So what I'm also looking for in those lower time frame is also still another block, right? Now you know how to identify that block now. So now the concept is this. Once you get your directional bias, now let's take for instance, let's take assume I have let me take a monthly time frame analysis. Me I know, say I know, feel I got the life of God, I must unfailable. All right. So let's replay this market back to let's just cut it off from here. All right, so we assume we don't see what is here, right? We don't know what is happening here. Okay. Okay, so sorry, so let's continue this, right? Oh, sorry, I just want to check my recording is oh, it's going on. All right. So now if I have this market, okay. Now I'm trying to play back now. I have one time 1 month time frame here. Okay, so I want to look at what structure is my market saying. Okay, now see this market now has been going bullish, right? It already broke structure here, right? It keep breaking structure to the upside, right? Keep breaking structure to the upside, right? You can see it keep breaking structure to the upside. You can see that this trade without any other thing from this circle like this is a bullish market because you have seen the first break of structure is the second break of structure. So what I want to align myself is what? A buy, right? It's a buy market. So possibility like that, this market now is buy, right? But now here, look at this last green candle here. This last green candle here, right? If I call that my order block, is it possible? Yes. Reason because I see that after this last green candle here, there was continuous void, liquidity void. Markets rushed down away from it. Okay. So it can be called a order block. Don't worry, I'll give you about four ways to know if to know a valid order block, right? So that means if I say, okay, well, this is a multi-type and I'm a position trader, right? And I'm a swing trader and I decide to wait here like this. I would just want to catch small analysis here. Maybe I just want to play within this short, because short market is directly bullish, right? Now this market, we've done PDRA now. This market is already at discount, right? So normally what I should be looking for is a buy market, not a sell market. Okay, so where is my sell going to end? Where is this sell going to end and continue to a buy side, right? To continue an upside. That I should be anticipating on a normal ground. But possibly like that, okay, I say, okay, let me just say from here to here, I can see one fair value gap here. I'll still decide to watch reaction, though that's not what I want to analyze today, but let me just give that tip here. So I decided to say, okay, this is a fair value gap here. This is a fair value gap here. From here, I hope you can see it clearly. This is a fair value gap, and this is an order block. And this is an order block, right? This was the last red card that was printed for a sell before you see continuous to the buy side. Okay, so I can start to position here. I'll be waiting for market. Is that not? Maybe. So let's play our market and see what the reaction gives us here. You can see from that zone, see what our market does, see what market is doing. You can see what market is doing. And you see what market is doing now. So that is an order block. That's how order block comes into play. You can see now, palm, and from here now, see where I am. I try to take here, palm, and you see again, see what market is doing. And from here again, I can pick another set entry, because this market cannot come down because I'm in a bullish trend, right? From here again, I pick entry, and you can see go to the upside. Why am I picking entry here? This is the order block, and this is where we have room. Okay, so let me just pause our trade, and you can see that is reaction. That is reaction. That's how you keep catching market in and in and in and in like that. Okay, you keep catching, and that's month. So I decided to pick position here and wait for a month, and you can see what happened here. But meanwhile, I'll pick my entry in what? In daily time frame. So I can say throughout the month of, which month is this now? This is January. Wow, our backtest has gone for 1992. Especially they never bought some of us for there. But anyway, this is switch, yeah. I didn't take notice of that year. Anyway, so that's it for a month of in April 2022, or January 1992 rather. I decided to pick stay a whole month, and I 2 months, and I position and take. You can count the number of people that would be for you now. Imagine you have good lot size. Just all right. So that is it. That is that. Okay. So there are four things basically. Okay, to then another thing you want to see is that you want to let me back this market, because there's no need to back. Let me just go. Let's study this reaction here. What happened here before I entered a sell? Okay, let me go straight to my daily time frame, and you see what I mean by after you have analyzed your trade, your trade. Okay, that's the first one. You know the structure, right? The next thing you want to do is you want to wait for a change of character in lower time frame. A change of, you see that there will be a change of character in that post place in lower time frame. So let's just see. Let's go back. Let's try and trace it back to, okay, so I think this is here. Okay, now you can see a change of character here, right? You can see a change of character here. So you can see a change of character here at this point, right? Or you can decide to use this break of structure here, and you see this change of character here. So you always see change of character in lower time frame before you can look for, say you want to join that trend for position of a buy or a sell. Okay, a buy or a sell. You want to see a change of character in lower time frame. Okay, and let's take for instance, let me arrange this clearly so you can see what I'm actually showing you. Okay, see this market now. So for me to join the trend to an upside now, see the market already came into my point of interest, right? I already know that this overall trend in the downs, you can see that this overall trend for this lower time frame, daily time frame, it's extremely a sell entry, right? So really sell top. But you are, if you have to pick sell, normally you are not really seeing good entry model from all of these places. I'm not seeing any of your entry models, okay, to pick trades here. But for the buy, rather for the buy to continue the sell of the or the buy to join to align with your higher time frame, you will see the confirmations here. So, and this is the confirmation. You want to see a change of character. Okay, what I mean change of character. No, this was our fair value gap that we drew, right? So when market got to this fair value gap, what happened? You see this market breaks through to this upside, right? And what happened? It traded down again back to this already give us a change of character, right? A change of character. So you're waiting for a retracement back into a institutional reference point. I know that institutional reference point, whether your order block, I see that this is another block, right? This is another block again. This red candle against a bullish order block, right? That was broken structure up. Okay. Then now you also want to see, so when you've done that, okay, once after you see that change of character, then you wait for a re-entry into another institutional reference point before you pick your entry. So possibility like that, you mix this all this trade like this, like you mix everything, and when you see market was here, right? You don't rush, don't rush. Look for other institutional reference points within the zone, eh? And then you now pick entries from there. So you all see. So you don't rush. Look for any other institutional reference points within this zone, okay? And what are the institutional reference points? We've listed them earlier. Now we've listed them. We have okay. We'll still list them again. Shall we have fair value gap? We have other blocks. We have mitigation blocks. All of those things. Um, hold highs and hold lows. Okay, those are institutional reference points. Okay, so you look at it like that and before you pick entry. So I look at something here again. Look at this place again, very interesting. So you see here, you see what a change of market structure, right? Market shift, right? Then what happens? The market come back what to the other block, right? Come back there and then shift breakdown, right? Okay, just so this is a mitigation block, not really another, but this is a mitigation block. So that's a mitigation block. So it's that form of other block though. So and that is how you keep seeing like that and like that. Okay, so now you want to look out for is now you can see this market again. So as I'm watching this market now, I know that my daily time frame or this is my daily time frame. So you keep watching and watching and you see how we are going, because we already have a change of market structure, so we are selling, but at the same time I want to align with the uptrend. Okay, I want to see break of structure and market has to break through to the upside before I join any upside. But here now you see the market, it keeps going down. So at this point, what you are looking for is a down market, okay? But you see a major break of structure to the upside before you join a up movement continuously like that. All right. So and how to know if other blocks are valid? How to know if other blocks are valid? Number one, market must break a major structure or lead to a major shift in market structure. I hope you're getting me. That is, it must either do a break of market structure, a change of character, must do a change of character, it must do a change of character. Okay, so we have like this now. See this market now. So this look at this other block here. Look at this other block here. This last green candle here. Now this great candle here, I will use it to analyze everything basically to tell that it's valid. Okay, tell that it's valid. to show a valid okay, it's really valid for us. The last green candle before a bearish move. Okay, let's take this. Let's look for a better one. No, I'm not saying all my analysis here. I'll tell you why all this one is not really valid. Let's go on. It's just partially valid, but not really valid like that. So let's look for markets that is valid. Let's look at sorry, what did I press? Let me drop my replay button. Let me go back to my monthly time frame. Okay, so all right. Okay, so let's look at all right, see on my right off. Very funny. All right, so just a minute, please. All right, so I hope my recording is going well. Let me just check. All right, so all right, so let's take for instance, this is the rule. Number one is I want to see that it leads to a break of structure, right? The market really breaks structure. Okay, it breaks structure. So let me take this for instance, or should I take this? Okay, let me just take this for instance, so we can see a very valid break of market structure. So this is the order block, right? This is the order block. It's a valid order block. Why is it valid? Number one, you want to see that it leads to a break of structure or a market shift in market structure. Which was it here? You can see this very obvious, right? An obvious shift. You see it, right? It's an obvious shift. Market really ran down here. Number two, you want to see that it has um it's not it is unmitigated. How do I say unmitigated? Like unmitigated English. Why for person who knows sabi English? Oh. Anyway, unmitigated means that it has this form of imbalance and fair value gap. Same thing with English. It must have an imbalance and it's all unmitigated. Like it has not been traded into. Thank you. I love that. So let me use for instance, if I said let me use this one, you know that this is an order block, but it didn't break low. So this green candle is a block, right? A very large order here, but it didn't break low. So this red candle didn't break this low. So it's not valid. If I use this one, right? The market traded above it, so it is mitigated. Are you seeing it now? Liquidity does not rest above it again. It is mitigated. But though it still had some, that's why I didn't use it, still has some of the preferences we'll be using. Like another third one is that it must have an imbalance. An imbalance in the sense that imbalance with it's about a fair value gap. Okay, we'll teach fair value gap and how to enter fair value gap. We will like that one so much. Okay. Fair value gap. After this, I'll be dealing with fair value gap now. So if you have seen this, know what fair value gap subsequently. So okay, we're using this, right? So fair value gap close to it, or close to it. So you can see this gap here. Of course, it's looking as if it's not vivid, but it's vivid. No matter how small it is, it's still a gap. Price did not trade it fully. And this second one here. So you can see there's still an imbalance. There's still a space between this week of this candle and this third week of this candle. There's still a space you can see there, right? So in the future, we expect price to what? Come straight into it, right? And this is where you pick your trade. Once price get into it, this is where you pick your trade. You trigger it and you target the next low. don't be too greedy. Of course, me, I'm a greedy trader. So an extent, sha. But don't be too greedy. So you target the next low, okay, and you are off. So if it's a daily time frame you use for your entering, so you are going to target the next daily low, time frame low. If it's your 1 hour time frame that you see your setup, you are targeting the next 1 hour low. If it's 30 minutes time frame, you see your setup, you are targeting the next 30 minutes low. All right, so it's 4 hours, you are targeting the next 4 hours low. Okay, so that is what that's number three. So number four, which is very, very essential too, it must be in either a premium or discount level. Other block may not be very valid. Sorry, other block may not really valid. Sorry, if it is at equilibrium. We've talked about PDRA. Because I'm taking it step by step so that as I'm entering one, I'm referring you back to the other one. You know what equilibrium is, you know what discount is. That means if you take from instance, from here, from this high, or okay, let's take where we are measuring from here to here, you can see that this other block is at premium. That means you want to sell from here. So I think for market to come back here. And if I take this as my order block, sorry. So you can see now, so you pick entry from there. So you want to see the fact that it's at premium or it's at discount. So you are picking other block, you know it's at. So look at this last red candle here. It's another block. You can see our market came back into it. Did you have a value gap? Yes, you are seeing it here. You are seeing the gap here to here. You are seeing the gap. So that is how you identify other blocks. So if you check this one, this market blocks in lower time frame, you will see that that's how it's so you always see that, and then you want to take trade from there to high, like that, like that, like that, and like that. All right, so that is all on equilibrium and sorry, all on other block. That's all on other block. Consistently you need to practice. When we get to overview and conferences, you will see what we are talking about more, and then you want to see. So you want to see all those. So as we move on, you see conferences and you see how to use them to pick trade effectively. Another way to use other blocks to pick trade. Okay, let me just explain this. You know, when we're talking about market structure, right? We're talking about market structure. One of the things that market structure trades help to other block up to do is we want to use it to find retracement. So other block is more, it has so much of importance, right? Like when I begin to see markets doing breaking highs, right? Taking high, breaking low. So where does market retrace back to? Once it break the structure now, see this market now, see this other block here. Market retrace back into it. Are you getting it now? Market retrace back into it. I hope my recording is going well. All right. So our market retrace back into this place. This red candle here, right? This red candle. So that means if market will move, you want to wait for this red candle here, come back, and you tap into it and you go off. And again, if you miss it again, you see that the red candle again, market break structure. This market broke structure here, right? And what happened again? The market came down again to this place. Of course, your TP, your SL, and the likes. So you always see market retrace back there and you see it. And again, look at this red candle again. When market decide to break this structure, so this is a break of structure. Does it have fair value gap close to it? Yes. Look at it. Look at fair value gap. You can see what market did again, come down here. Let me trace it out so you can get what I'm saying. Look at this gap from here to here. You can see it. You can see it. See what market did again. Came into the zone and what? And pick off. Alright, and pick off. So the same is applicable in synthetic and every other forms of trading. Every other forms of trading. Okay. You already see it there. Alright, so see you again in the next class. Thank you. So you can go to your chart and see what you want to do and back test the strategy, check it and use to pick trade entry.